Good morning, afternoon, or evening all. Thanks for joining us today for Stable Stories. Stable Stories is a video series that explores the behind-the-scenes experiences, learnings, and insights of builders pioneering in the stablecoin industry. Today we have Martin Bruncko, the founder and CEO of Schuman Financial. Schuman is the largest independent issuer of stablecoins in Europe and the issuer of the Euro-P stablecoin as well. Welcome, Martin. How's it going today?
Good. Great to be here. Thanks, Dave, for having me here.
Yeah, of course. I'm excited about this one. I'm excited to talk about non-USD stablecoins. It's exciting.
Yeah, great to be, I understand, the first euro or non-dollar stablecoin guest on your show.
You are.
Lots to talk about.
Yeah, hopefully first of many. So why don't we'll kick things off with a couple of traditional questions that we ask all of our guests. If you give us a little background on you, on Schuman, and your journey into crypto that led you to founding the project.
Yeah, so thanks for the Dave. So my background is, so I think I have a background both in business, I would say, including crypto. But funny enough, I've spent actually a decent amount of time in government. So I used to have a few government roles, including as innovation minister and deputy finance minister of my country where I come from, which is Slovakia. And one of the things that I did during these years was I actually co-wrote the euro adoption strategy of Slovakia. And then I was actually responsible for the Eurozone affairs of Slovakia. So I used to sit on the same committee with like Christine Lagarde and many others, really managing the euro finance, along with other finance ministers of the EU. And I always thought this was such a useless background to have when I moved back to tech, because 10 years ago, 15 years ago, like tech obviously had nothing to do with government and regulatory. And fortunately, I was proven very wrong. Well, I don't know if this is fortunately, but for better or worse, somehow tech became very political, and certainly finance became, if not political, at least quite regulated. So there is a big interaction between government and tech in a way. So now this experience has been coming in very handy. So for the past 20 years, when I was not in the government, I was mostly a tech entrepreneur, mostly in deep tech, so science and engineering based companies. But I started to kind of dabble into crypto in 2013 when I bought my first Bitcoins. I totally didn't believe in it. I'm an economist by training, and so I thought this was absolute bullshit. Like
you believe it, but you bought it in 2013.
So exactly. So I did not. People are trying to convince me that this is going to replace money. That Bitcoin is going to replace normal, or fiat money as we call it in crypto. And my take was no way. And the person who introduced me to it was actually super amazing Silicon Valley fintech entrepreneur, but he was from Argentina, right? So if you're Argentinian, it might sound like a good idea to replace fiat money with something else. But anyway, long story short, and eventually I, through some twists of the fate, I became an advisor to Binance in their very early days in Europe. And then Binance actually, this is public news, they kind of fell afoul with the regulators around 2021. And this is when CZ brought in a whole number of people with previous also government regulatory background, including Richard, who's now the current CEO of Binance. And I was one of those people. I was in charge of Europe, and my task at the time was to fix the relationship with the regulator. So I actually came up with the whole plan of kind of building a European headquarters in France and getting our first official license anywhere in the world, getting it in France, France being one of the G7 economies, which is basically what we did. So I spent a few years in Binance. And one of the projects actually I convinced CZ that we should be doing was the Euro stablecoin. And so we started working on that. Eventually, after I left, that project kind of got frozen. But I have been a big believer in Euro stablecoins for many years, and big believer in the sense that it's very clear to me that euro stablecoins will very likely end up as a very, very large business and a very large market. And the logic is actually quite simple. The logic is, there's twofold logic. There's a kind of very simplistic logic, even from Binance, right? I mean, if you live in America, well, kind of you think that the whole world runs on dollars, which is true-ish, but most of the world doesn't run on dollars. Actually, and specifically where we live in Europe, this is a market of almost 500 million people. If you take EU as a block, essentially one of the 2 or 3 largest global economies, and we run on euros. Nobody thinks in dollars in here. Everybody thinks in euros. So even on Binance, it was very kind of weird when, if we ran a marketing campaign trying to bring in new customers who were increasingly more and more mainstream people, so not your hardcore crypto folks, and we were telling them, hey, bring a friend to Binance and we will pay you $20 for it, right? Like, people just don't think in dollars, they think in euros. But more fundamentally, the reason why euro stablecoin market will inevitably be very large is it's very simple. So euro-denominated finance is the second largest financial market in the world. So depending on what sub-market you take, whether it's payments or like banking assets, the number fluctuates, but more or less it's 30% of the US dollar market, right? So we're talking about a massive market. And if you believe, that finance is gonna become increasingly more tokenized, which I very deeply believe, simply because I do believe that blockchain is a much better technology for storing and moving financial value than anything else. So I deeply believe that finance is going to move on chain. So if you believe that, and at the same time, you don't believe that Europe is going to ditch the euro and move to the dollar, which I don't believe for a second. Like, Europe is not going to ditch the euro for all kinds of reasons. We will have a euro here for many, many years. Then the inevitable conclusion is that Europe will also need a tokenized form of the euro. Because if you want to move all of these euro-denominated financial markets on chain, you need also euro on chain, which is basically a euro stablecoin. So that's why we believe that the future for euro stablecoins is going to be very bright. And that's why we decided with a team of people with very strong both crypto but also TradFi background, that let's build that perfect euro stablecoin issuer who can become a dominant euro stablecoin, now and in the future.
Very, very interesting. Yeah, I tend to agree with you in terms of the local markets and the stablecoins. Generally, I think there are some exceptions in some markets, but US dollars are being used as a settlement mechanism, but the last mile is still happening in fiat currencies because people think in terms of their own local currencies, because people think in terms of their own currencies. I'm in Europe as well, been here for a few years, but I can attest to the fact that I do think in euros as well, even after only being here temporarily. There's a couple of threads I'd love to pull on there. The first one being in terms of the use case or the usage of a European stablecoin. The ECB announced a pilot for a CBDC rolling out in the next couple of months. I'm wondering if you could speak a little bit to the distinction between a stablecoin like Schuman's putting out, a CBDC, and how those two interact in the same market. And then if you also want to make some predictions about how you think the rollout will go or the test will go in the European market, that'd be awesome too, because I'd be interested to hear what you had to say.
All right, so I'm very conscious that I might really piss off the people I really don't want to piss off, which is my regulators. But look, as I mentioned, I spent many years in the government, right? I mean, I used to be one of those people who were actually guiding, supervising, and bossing around those people who are now like building this euro stablecoin, right? And as I said, like the chairman or president of the ECB used to sit around our table. So it was basically ministers, deputy ministers of finance of EU countries, head of the relevant Director General in European Commission, and the head of the central bank, ECB. So, I know these guys, I know how they think. I also used to, as an innovation minister in my country, I was also in charge of e-government. So I also know how efficient or non-efficient, rather, governments are when they're building, IT infrastructure. So I think first the distinction is that what they've been announcing so far is that they want to build the CBDC for a wholesale use cases. So wholesale essentially for transfers of money between the ECB and the banks, and potentially also between the banks themselves, right? But there's no, not at least not in the short term, any no goal or no ambition to do it for retail use cases, or so the kind of what I would call the application layer, right? So that's the first thing. And what we're building is like the application layer, like the payments, the whatever it is, lending, real world assets, like a settlement instrument there. So first of all, that's and I don't see how ECB can possibly do that, because building a successful stablecoin ecosystem, it's not really about the tech. The tech is fairly simple. It's really about building the business around it, the application layer, the infrastructure, so that people who are actually using you are incentivized to do it. And I can't possibly see how the ECB would go about it, short of hiring a whole bunch of biz dev managers and account managers. So, and that's not what the ECB is in the business of. So, the other thing is I'm generally very skeptical of government-run IT projects. They take forever and never really work. The reason I think why ECB is doing it is because they're freaking out literally about the fact that, hey, finance is now actually seems to be moving on to blockchain, and like you have this dollar stablecoin, and actually 99+% of well, let me put it differently. About less than 50% of global finance runs on dollars, but something close to 99%, actually more than that, runs on stablecoins, right? So they're freaking out about like dollarization push in Europe, and they're trying to find an alternative. And although these people are extremely smart, they're typically economists and I don't want to say bureaucrats, but they're government people, right? And so they have very, very, very limited tech understanding, let alone fintech. And so I think there's just a natural somebody in the ECB, figure out a while. They've been working on a digital euro for 10 years, at least. And so this is now maybe 8, but for quite a while, right? And so so there's a push there. But I'm not terribly concerned, or whichever way you look at it, or optimistic that this is going to become big anytime soon.
I think that totally makes sense. And anecdotally, earlier in the year, I watched a 2-day. I watched the whole thing, but I watched the highlights of a 2-day summit from the BIS Innovation Hub, and I really got a palpable sense of urgency on behalf of the majority of the speakers to really wrap their arms around this digitization of money, or it sort of escape from them. So I think you're dead on. Everyone knows they need to do something, but I'm not sure that anyone really understands how to actually go about implementing.
That's the thing, right? And again, like I spend a lot of time there, and they are very, very smart people. But even generally, when it comes to tech, they just don't get it. Like, because that's like I don't really understand aerospace, how it works, right? So if you tell me like, okay, we need access, Europe need access to outer space, like, okay, great, but I would have probably no idea, or like any of us, how to build those capabilities, right? And that's a little bit how these governments or high-end government / policy making world works. They're not tech people.
And to their credit, I work in crypto, and there's a vast majority of stuff that goes on that I don't understand.
Same for me, right? So obviously, right? this is very difficult stuff, but yeah.
Fantastic. One of the other things I wanted to touch on, talking about your background, are there any parallels that you notice between rolling out the euro, like your experience rolling out the euro as a deputy finance minister, and the adoption path that you see for stablecoins into new markets? Like, are there parallels that you're seeing happen in real time with stablecoins that you noticed while you were deploying the euro?
Not really, right? Because basically, when we're deploying the euro, like it was super simple. We didn't have to do anything. We just said that, I mean, I'm simplifying here, right? But in your system, this thing that was called Slovakian crown, we're gonna rename it to euro, and basically instead of getting 30.5 for each 30.5 of these things called Slovakian crown, you will only get one now, and it's going to be called euro, right? So I mean, it's a massive simplification, but it was basically all just about you take what's out there and you convert it into like kind of instantly, effectively, to something else, right? So in that sense, it was very, very different. You were just kind of converting the existing market, but it was a fairly, I would say, insignificant. I mean, in a way, it was fundamental, but from a structural perspective or implementation perspective, this was very easy. Whereas with stablecoins, like we're building new market from scratch, right? This is why it's so hard to build a euro stablecoin market, is because you don't have the usage here right now, right? So actually, there's a lot of people who are using stablecoins in Europe, but I would say overwhelming majority of that, even globally, it's for crypto trading, right? So it's really now about kind of building up these new markets, just like is actually what is happening overall in the stablecoin space, right? That overwhelmingly until now, stablecoins were used just for crypto purposes. And they still are, but now people realize, well, wait a second, there are all of these real world use cases, and there are going to be orders of magnitude bigger potentially than the crypto use cases, but we still need to build those up.
Awesome. So one of the things you mentioned was the difficulty of building stablecoins, building a net new marketplace.
Yeah.
One of the biggest blockers that people typically point to that have been recently moved, earlier for Europe, more recently for the US, is regulatory clarity. You've got MiCA a while before the US got Genius. But could you talk to me a little bit about what this regulatory clarity unlocks, how it changes the conversations that you're having with other players in the space, in the TradFi space, with regards to stablecoins and digital dollar adoption?
So it's two things. It's not just clarity, but it's also the strength of your license, right? So we have decided at the beginning, and we made a very hard decision of kind of, in a way, do a very, very difficult first step, and that is getting a license not just somewhere in the EU, but getting it in France. And the reason was that probably France and Germany might be the two most difficult countries to get a license, because the regulator is extremely, serious and very thorough. But we figured that, look, it's hard to get this license. We have an EMI license, right? So it's effectively electronic money institution. Like a lot of the fintechs, actually Revolut, when it started, it was also just an EMI. So with an EMI license, but a French one. Actually, even Revolut didn't have a French license. They started out of Lithuania. And so, but it wasn't just that. It's also, because then it becomes like a virtuous circle. So because we were getting an EMI license in France, which is highly credible, and basically says, look, if this regulator says these guys are okay, then probably we as a financial institution can work with them, right? And so the most immediate effect was that we were able to get as our custodian Societe Generale, right? Which is SocGen, which is one of the top 20 global custodian banks. So now there's no way they would work with us if we didn't have a license in France, let alone if we didn't have any license. And so then it becomes a virtuous circle in a way, because then you come to any kind of TradFi company and sort of both, if you are trying to get more like banking partners, right? So where there's one other very, very large, one of the top European and largest global banks where we're also onboarding for like an additional bank. And you tell them, oh, we have a French license, I have this Solgen already working with us. It's just so easy to get them on board, which shocks some of our crypto partners, because we've had some partners, including like large regulated European crypto players, who. So in this case, it's a bank that we're onboarding on in a large EU country. And there's a large player regulated in that country, crypto player, and they told us, how the hell did you get this bank to work with you? We've been trying for years to work with them, and they're just refusing us. So yeah, bottom line is, it definitely gives you that kind of credibility, and then it gives the comfort to these big TradFi players, which is, if we believe that, the big game is going to be really played in the TradFi space, you need it. It really helps.
Yeah, that makes a ton of sense. And sort of like taking a step back to European markets generally, you mentioned previously in a post, I believe, that European capital markets are a bit behind the curve on Asian and American development. And I was wondering if you could talk to me a little bit about some of the structural barriers that have maybe in the past impeded that, but are changing or have yet to change, or what needs to change in order to catch up?
So look, I mean, this is a known fact, and many smart people, including Mario Draghi, and Enrique Letta, like did this big report. So Mario Draghi is the former president of the ECB. Obviously, everybody knows, I guess, was listening to this. Enrique Letta was, I believe, the former prime minister, president of Italy. They wrote this report. What does Europe need to do to be more competitive vis-a-vis America and potentially even China? And the key conclusion is like we need a unified financial market. This is a huge problem in Europe right now, right? That we do not have a unified financial market. And in theory, it's just one market. We're all on the euro, but then everybody is using their own like national infrastructure, right? So for you're selling or settling securities, just simple stuff like buying and selling like money markets, like every country has a different register, right? So like you might need to, in the US, you register your security with an SEC, and there you go. You can sell it anywhere you want in the US. In here, not quite, right? Like you still have like almost these 27 different markets. So it's a very fragmented market. There's been a push from many sides to, let's kind of get rid of this national infrastructure and replace it with like pan-European, but people are resisting for all kinds of reasons. I mean, usually the regulators, often they're lobbied by their own financial institutions, explaining to them what a disaster this is going to be for the French financial market if we suddenly let the Dutch, let alone the Slovakians, to come in here like without properly registering in France. So long story short, the beauty of crypto is I think that a lot of this old infrastructure will become obsolete. And so instead of, it's like, rebuilding, instead of kind of rebuilding an old building with 27 rooms and like everything being old and complicated, you basically just say, okay, no point worrying about this old building. We've just built a new one, brand new one next door, and which has all the efficiency, everything you need to have in it, and then you can just forget about the old one. So I think that's kind of where in a way that's the promise, or one of the many promises and potential benefits of this new crypto enabled or blockchain enabled fintech wave, that hopefully it will speed up the integration of the European financial market.
Makes sense. It's funny you use the house analogy with Europe, because I love the fact that Europe's maintained all of the old houses and actually gone the inefficient way of keeping the molding and doing the retrofitting.
So the old houses, well,
I know
anyway,
it doesn't finance. It was just a funny analogy.
No, look, and again, I'm not saying that we should all become like everything should look exactly the same, and I think it never will. But I think when it comes to effectively abstract, non-tangible infrastructure like this financial market infrastructure, or effectively, we need a single market. We need to unify it. Otherwise, we can never compete with the Americans or the Chinese. And then the second thing, we need to deregulate. I mean, it's insane. The level of like regulation in here is insane. I mean, just today I was complaining to my regulator that in order to be able to deploy on a new chain, we actually need a preliminary approval of our regulator, which needs to get it from the French central bank to ensure that the network is secure, right? And there is one network that we want to be deploying on. We've been waiting for 7 months, and this is not like some obscure kind of chain that you've never heard of.
Yeah,
it's a pretty mainstream chain, and we're waiting for 7 months. And we cannot go and deploy, right? Because like they just didn't give us their opinion. And to be honest, like I have no idea like what they're even gonna tell about it, right? Because like this is a chain that's widely adopted. No, there's never been any like chain level issue. So if the crypto hackers haven't figured out the vulnerability and made a shit ton of money on that, I kind of doubt that some IT people in the Central Bank of France, no matter how smart they are, that they're going to find these vulnerabilities.
Yeah. 7 months is like 4 crypto cycles.
Exactly. I mean, it's insane.
I'm a little surprised. And this was kind of going to be my next question is like, does the central bank have the resources and the requisite knowledge to make that call?
No.
Actually? Okay. Yeah,
no.
Okay.
I mean, look, my honest opinion is no, right? Like, again, I'm not talking specifically about the French central bank. I mean, if there is a central bank in Europe that has that knowledge, if there is one or two of them, the French one is one of them, right? So like I have huge respect for these guys, and they're super smart people. And actually, I have to say, just generally speaking, I'm actually very impressed with the French regulators. I honestly am, because they're very constructive. Like they're very constructive. Like they still have to apply the same rules to us as they would apply to banks, because that's what the law is telling them. So the silliness is kind of on the side of the law, but they're being very reasonable and proportionate, right? And understand that, look, probably shouldn't be treating this startup in the same way as we are treating a bank with 20,000 employees. But I think on the technical level, I can't see how they could have those capabilities, right? I mean, generally speaking, outside of a couple of superpowers, I just don't see, and it's probably the reality is that outside of a couple of superpowers or heavily militarized countries, the government doesn't have that tech and / hacker capabilities that broader tech world and the hacker world has out there, or crypto world, right? In this case.
Yeah. In my mind, it's just some poor intern at the Bank de France in the basement, furiously typing into ChatGPT, trying to do a chain audit.
So I think it's not that. No, it's not. I'm sure it's not that simplistic.
No, I'm
but I see what you mean. But like, I mean, I could imagine in some other central banks, but not in the French central bank, right? But again, it's just really silly, right? And it's also like stupid from a regulatory perspective, because effectively, like if you put yourself into the shoes of the person who's supposed to give you the approval, right? Like it's a lose-lose situation for him, right? Or there's no win, because if he gives you the approval and nothing happens, it's like he never gave it to us, right? Like I have no idea who they are, and I'm not going to congratulate him for the approval. But if God forbid something should happen to that chain at some point, it's kind of like it's going to come back to him and says, like, why the hell did you approve this chain if it went wrong, right? So it's completely silly, right? But I mean, there are things again like this, stemming from broader requirements. This is what happened when you overregulate. Like you have good intentions of like, I'm trying to protect the consumer, or I'm trying to protect the integrity of the market, but then you end up with all these like kind of externalities or impacts you never really assumed, right? Basically the regulator was supposed to ask us to do a penetration test on the Ethereum if we wanted to deploy on Ethereum, right? How do you do a penetration test on Ethereum, right? And they themselves understood that it's kind of silly, right? But in theory, that's what the regulation says, that if you're going to be deploying this infrastructure, you should be pen testing it.
Yeah, there needs to be a box that is checked somehow in some way to verify that, because the rule exists. That makes sense.
Yeah, because the rule exists, right? And again, and I'm sure whoever was doing that original rule, like that might be a rule, which might be 25-year-old.
Perfectly valid for the time.
It was perfectly valid at the time, but like they had they could not have known that at some point in some other future technology, if it were to be applied, it just doesn't make sense.
Yeah. Awesome. One more section that I wanted to get to, if you've got a few more minutes,
of course,
before we close things out. Really just wanted to talk, zoom way out, and get your take on why non-USD stablecoins, because the context of the stablecoin market right now is it's nascent, it's huge, it's going to take over the world. Digital dollars are coming. It's sort of like the meme, the meta, especially in crypto. I think more so in the mainstream. But I don't think a lot of people are really deeply thinking about non-USD stablecoins, about local stablecoins, and the benefits that those have to the local markets that they serve. Not so much with the European the European market. I think everyone recognizes the fact that European stablecoins are going to be major players as well. A couple of other big players, but just generally. Projects like Mento that are building on-chain FX markets for local stable coins, things like that. Like what is the benefit of that to governments, to people, versus ubiquitous USD adoption, which I think maybe is, even though as an expressed, is like in some way in the back of people's minds when they think of stable.
Look, I think this whole the world will run on dollar stable coins, it's pure nonsense, right? And it's absolute nonsense. And it's absolute nonsense simply because most of the world doesn't run on dollars, and most of the world doesn't want to run on dollars. And by saying most of the world, most of the governments in the world do not want to run on dollars, their economies. And so right now, dollar is ubiquitous. Dollar stablecoins are ubiquitous because they were an initial tool for crypto trading applications, right? Or crypto native applications. And that market basically originally, developed in dollars, or was denominated in the dollars. And so it was kind of logical that once, crypto trading went through full tokenization, meaning you're no longer trading against the crypto on the one side and fiat on the other side. The logical step was, well, let's just tokenize the currency against the fiat currency against which we're trading, and that's the dollar. But again, to me, that's a tiny use case, right? I mean, and as I said, most of the real world financial services don't run on the dollar. And so because that's the case, if these financial services are going to move on chain, by definition, the currency in which these financial services are denominated, it will need to be tokenized. Like they will need to move on chain. And again, people don't realize how tiny the crypto applications still are, right? But if you just look at one very simple, very specific sub-market in TradFi, which is dollar to euro FX market, right? The daily volume in that market is something like 20 or more times bigger than all of the spot crypto trading on all of the centralized crypto exchanges in the world, right? It's just one product. So arguably, this is the largest, financial, like TradFi submarket, but it just gives you the sense of how big the traditional financial markets are vis-a-vis crypto. So so that's why, again, and I think if anything else, now is also a good time for other currencies, and particularly for other potential alternative currencies to the dollar, because we see what's happening in the world with the geopolitics and what the current US administration is doing, a lot of governments outside of US, a lot of countries are and players that are being disincentivized from using the dollar, right? Or at least partially, hedging themselves and partially moving into other currencies. So I think this is creating even more opportunity for other large global currencies like the euro.
Yeah, I think that makes sense. Thanks. Awesome, Martin. I think that's all I've got right now for today. If people want to learn more about Schuman or you, where should they go?
Yeah, well, Schuman.io, Schuman, SCHUMAN.io. You'll find all the info there about who we are, what we are, and most importantly about our Euro stablecoin, Euro-P. You can find actually Euro-P on most of the large regulated exchanges in Europe, including Kraken, Bitfafo, Bitpanda, and many others. So and if I think you will also find my contact info there. So shoot me a message if you want to help us build this ecosystem out into other exciting and interesting areas and applications.
Fantastic. And we'll add all those links in the show notes, so they are down there.
Thank you, Dave. Appreciate it.
Again, thank you for your time, Martin. This has been an awesome conversation. I really appreciate you taking the time and coming on today.
Pleasure was all mine. Thank you. I had a lot of fun speaking with you, Dave, today.
Cheers.
Cheers.